David Delgado here, Freedom Choice Lending President and CEO. Today's video, we're going to talk about mortgage rates, where they're currently at. I got some great stuff. So if you're thinking about buying, selling, or refinancing, you may want to tune into this. So there's a couple of different key forces that are shaping today's mortgage landscape. Mortgage rates, where things are at today, where things are probably going to go tomorrow. So pay attention if you're thinking about refinancing or buying a house. Yields, the U.S. Treasury yields are great. It's a great source for us mortgage loan officers to figure out where things are going. And over the last 24 hours, we've seen the 10-year yield, the 10-year Treasury yield, actually inch up a little bit. And we're seeing that impact the mortgage-backed securities, which ties directly to the mortgage rates. So mortgage rates, what typically happens is when the Feds announce the rates already dropped right before that. Feds announce the rates, and then we see a spike in interest rates because of the 10-year Treasury yield. So today rates are a little bit higher than they were last week, but not much. There's still a lot of savings out there. And the way I look at it is, if refinancing is on your mind, like, hey, I'm thinking about refinancing to pull cash out, or even maybe just to lower the interest rate a little bit. Maybe it might be a few $100s. Everyone's different, right? Maybe $100 might be a lot of money to you, and maybe it might be $300, $400, $500. Whatever it is, if there's a savings, you got to look at the not just the short term, but also the long term. On average, somebody that's saving $300, that's thousands of dollars over the next 10 years. Think about that. Saving now plus later on, maybe you can use that money to put into a savings account, or just pay off some additional credit cards. There's a lot of things that you can do with the savings, I'm sure. And if it makes sense to you, then I would say go for it. If rates would ever drop down to, let's say, 4% or 3%, like people are waiting for, well, I've been doing this for over 2 decades, and I've only seen that happen once, and I haven't even heard about it ever happening before that. So the odds of that ever happening again are slightly, almost not going to happen, right? The reason why rates dropped down in 2021, 2022 to 3, 4%, and some of these clients I know, they got a 2% mortgage. Well, what happened was back then is that the U.S. government was buying all these mortgage-backed securities, right? So they had to do that in order to put money into the market, drive down interest rates to help people buy homes because of the pandemic. So there's no pandemic today, and maybe not going to be another one, at least my lifetime. But that's really what caused these rates to come down so much is the U.S. Treasury, and they haven't done that for years, 30 years, where they actually were buying these mortgage-backed securities, causing lower interest rates. And so there was an oversupply of money in the market, which caused rates to go down. So ask me if rates are going to get down to 3%. Well, I just recorded it right now, September 2025. Probably unlikely, highly unlikely in the next 10, 15, 20 years. So more on to the next story that I have for you guys. We're seeing a lot of supply and demand, but in reality, it's almost kind of going back to normal. The inventory remains kind of tight to somewhat. There's about 1.5 million homes that are unsold. It's a 4.6 month supply. And if you really think about that, that is almost normal. And I'm over in California. When people want to put their house on the market, they want it sold like yesterday. But if you look at the national average, or the average over the last 20 years, typically, it takes 4 to 6 months to sell a home, right? So unless you're working with a real estate agent that has 50,000 buyers that they're working with, and they're attracting buyers before they even put the home on the market, which a lot of our real estate partners already have their clients sold before they even take the listing, because they're working with so many qualified buyers out there. That's why I always encourage all of our clients to get pre-qualified. But more than that, get your offer, get your approval, or your underwriting approval, where it's fully verified by the underwriter. That means your offer is going to be good as cash. You're going to be able to close in 14 days. It's going to be just a much stronger offer. So that gives you the edge when you start out there house hunting and making offers, because now you're going to be able to beat out other buyers for the best new listings. On top of that, we work with the top 200 wholesale lenders in the country. That gives you a huge advantage, because now we're able to customize a loan based on your current situation to find you the best interest rate loan program that suits your needs. So another thing that we're seeing that Fannie Mae's been talking about, that they're thinking that their rates could fall below 5%, or in the 5% range. Excuse me, let me fix that a little bit. They're expecting the rates to go below 6%. And according to Fannie Mae average, they are right above 6%. But because we get wholesale pricing, a lot of our interest rates are below 6%. So we're going to see probably a small bump, maybe lower in interest rate, but there's no guarantee because last year they announced the same thing. And what happened? Rates did the opposite effect. They actually went up to about 7% within about 30 days of them making a statement. So there's no guarantee that the rate's going to fall, another 0.5% or maybe a percentage. I haven't seen it happen in a long, long time, and there's no signs of it showing anytime soon. So if you're thinking about buying or selling, all I could encourage you, buying a home is to get fully qualified for a home loan. And working with us, we give you two options. One, we can get you a pre-qualification letter. That's something that I could just do, no problem. I get you the pre-qualification letter. It works, but I'm going to tell you something that works a lot better. This is where we get you fully qualified by a loan underwriter. That means your income's fully qualified, everything else fully qualified, and we're not rushing at the last minute. We're actually doing things in advance, right? So that way, when you're out there looking at houses, guess what? Your offer is going to be good as cash, and you'll be able to beat out other buyers for the best new listings, and more importantly, get that property that you really want, that you're going to call home many, many years. So if you like some more information, feel free to click on the link, read more about that, and also if you like this video and you want to subscribe to our YouTube channel, click subscribe. That way you'll be notified on the next video. And it was just an awesome to have you online and awesome to see you learning more about the mortgages and getting pre-qualified. And if you have any questions with that, feel free to give us a call at the office. We can set up a very clear mortgage plan for you. We go over prices, monthly payments, go over all the various closing costs, and also cash to close. So that way there's just no surprises in the process. To reach us at the office, its phone number is 866-587-6927, or check us out on the website, Freedom Choice Lending. Thanks so much for watching. Come back soon. Bye-bye.